Hello and welcome to this Campus Capital webinar, part of our virtual education series. I'm Samantha Deacon-Hill and today we're going to be talking about pitch deck analysis, i.e. the snapshot of a business. So today in some of our questions we're going to be covering the importance of pitch decks, what do we hope to get out of them as investors, is there an ideal process or approach for analysis, and what are the most and least important slides in a pitch deck? And live watchers, don't be backwards in coming forwards with whatever your questions you want to ask. These webinars are on topics requested by you and for you, so don't be shy. To help us pick apart today's topic, I'm joined by Anu Adebajo from British Business Bank and formerly Angel CoFund. So Anu, thank you so much for joining us.
Oh, thanks Samantha, thanks for having me.
And so I'm curious, how many pitch decks do you reckon have graced your desk over your career so far, Anu?
Yeah, I was thinking about this before, and I think whilst I was with Angel CoFund, I probably saw at least 2 a day. So I think I've definitely seen at least over 1,000 whilst I was there.
Wow.
And then I've probably seen now that I do something slightly different, I maybe see one every 2 days. So a lot.
A lot. Oh my gosh. Yeah, because you're at the other end of the spectrum now, right? And so yeah. Before, when you were looking at a lot of seed stage pitch decks, and now you look at pitch decks from VC funds who are pitching for funding. So kind of different, but some of the same stuff I'm sure still comes up.
Apparently, definitely, it's very much the same kind of content, the same content, and I'm looking for the same things as well. In both the VC pitches and the company pitches too.
Yeah, and so you're at British Business Bank now, and you were at Angel CoFund before. Could you just tell us a little bit more about those roles and any other investment experience you've had over the last few years?
Yeah, I think interestingly, my kind of journey into investing started whilst I was at uni, and I did finance, accounting, and management, and it was at that time that. There was quite a lot in the news about private equity in particular because of the AA, and there was a bit of scandal around that private equity deal, and it actually piqued my interest, and I wanted to know a bit more about what is this industry where there's a lot of men making a lot of money, and I don't see many other people like me here. This seems really interesting.
Everyone loves a good scandal.
So I thought this looks interesting. I started looking into it a bit. I did various other things once I left university, including a stint in a bank in Nigeria, came back to the UK and went into the Angel CoFund, which is a fund that invests alongside syndicates of angels. So because it's investing alongside angels, it's very much the early stage stuff, and a lot of seed and early stage investments. I did that for 4.5 years, and then I joined the British Business Bank Fund of Funds team where I am now. So rather than investing directly into companies, we are investing into VCs, because obviously VCs need to raise money the same way that companies need to raise money. And someone needs to be the one who gives them the money, and we do that here.
Yeah, and it gives you a lot of empathy going through that process.
Absolutely. I can imagine. Absolutely. Yeah, and you'd be amazed at how many VCs don't always get their pitch decks right.
Right. Yeah. Oh gosh. And so we've already said the word so many times, and it's the title of today's webinar. But what is a pitch deck exactly?
Yeah, well, as you said at the beginning, it is basically a snapshot of a business. If you think that you are trying to sell an investment into your business, and you are not always going to be there at the time when that is happening, you need to give people information, a snapshot that they can look at quickly, and as a decision point as to whether or not they want to meet you. Or follow up to find out more information. So it is really a distilled view of your company that is usually in a kind of PowerPoint form that you can send out to potential investors.
And it's usually one of the very first steps in the process, right?
Absolutely. Sometimes you will have never come across a particular company before, and the very first point of introduction is a pitch deck. Not always, and that's not always the VC's preferred introduction, but that can be the very first thing that someone sees. And people say first impressions count. That is often the first impression that an investor has of you is your pitch deck.
And that's certainly the way that we work here as well, is that, even if, somebody has met one of our student VCs, a student VC goes to an event and meets someone, it's still the first step in the process is submit a pitch through the site.
Absolutely.
Yeah. And so when you get a pitch deck then that comes, comes across your desk, do you have a particular process that you follow, for analysing the pitch? Do they tend to fit a specific format, and do you have a sort of formulaic way of going through these, or how do you do that?
Yeah. So for me, it actually starts even before I open it. So it depends how it comes to me. So does it come to me through someone I already know? Had I been expecting it, or was it just a cold intro that just came to my inbox? That kind of determines a little bit kind of how I look at it. And also, is it something? Has someone sent it to me more than once? Has it come to me through more than one route? That could be positive or negative. So if sometimes it means that it's, if it's people that I know that are sending it to me through various routes, and that's really good. It shows that my network is plugged into that deal, and it could be quite a good deal to look at. But sometimes it also shows that the founder doesn't know who is sending their pitch deck out. So sometimes I've had approaches from a founder where they've sent me a deck, and then I've had someone who may be a corporate finance advisor or someone else sending me that deck, even though I've already kind of started the process with the founder. And that sometimes makes me not 100% comfortable, because I feel you should kind of know, and have a dialogue with your advisor about what's happening and where your deck is going. So once I have that information, then I kind of decide, is this something that I'm going to pay a lot of attention to? I'm going to pay a little bit of attention to. Am I just going to skim it? And I usually do start in general by skimming, just to see how long it is, how much time is this going to take me to read. This is a 1 second skim. And then I tend to do it quite methodically, although sometimes I will go straight to the end. And this is really important, actually. If you are in a fund that has very specific criteria, sometimes it's really good to go to the end, where they usually have the terms, and see, does this actually fit the terms of my fund? Because if it doesn't, then you know that even if it looks interesting and you feel like you've got time to look at it, when you have loads and you have a lot of other things to do, it might just automatically rule it out anyway.
Yeah, that's a really good point.
Yeah. Then so after that, I will just tend to go through it in order, really. There probably are some parts of the deck that I weight more than others. So for me, the team page is really, really crucial. And most VCs say the team is the most important part of a company. Whilst it's great to have a fantastic product or service, invariably things change, and you need to be able to adapt to that, and that only comes down to the quality of the management team that you've got in place. So when I look at that team page, I'm looking for, is it just 1 or 2 people, or is it an actual real team? I'm looking at what the experience is of the team. I'm looking at kind of where they have worked before, if it's relevant, if they've been at companies where there is a tie-in and it adds value to this new proposition, and that's really, really good. Obviously, I want to look at what the product and what the kind of problem they're solving is, and that's really important too. Kind of, is there a market opportunity? And then I suppose things like, and it's different with early stage businesses, there might not be much actual kind of traction or real figures that they could put down, but sometimes they, if you've got revenue, say you've got revenue, that's really, really useful. If you've got customers, say you've got customers, that's really useful. But obviously a lot of early stage businesses don't necessarily have that, especially at the very early seed stage.
And as an investor, if they don't have that, would and analysing it, would you expect to see a slide that says we don't have this yet? I think it's kind of implied. It can be implied. It doesn't have to be necessarily as explicit as that. I think if you can kind of show in other ways,
it might be the date that you started, or it might be you say we've got a pilot scheme going, or you might say first revenues expected.
Right.
You know,
yeah.
So if that's there, then that's fine. But also, don't make me have to guess whether or not you have revenues or not. Like, do make it clear in some way, you know, what the state of the company is.
And that's kind of critical for young investors, you know, new investors as well, looking at pitch decks, right? Is, you know, don't make any assumptions.
Absolutely.
And you know, if you see that kind of language, you know, revenue expected, then you know that there's not revenue now, right?
Absolutely.
So,
Absolutely.
Yeah. Okay, cool. And are there any slides that in there that you completely ignore or that you don't lend much weight to?
It's interesting, because I think I felt a bit of discomfort with one particular slide, and as I've read around it, I think there are other investors that do as well, and that's the competition slide. So a lot of I would say all companies put a competition slide, and I think it's really good. You need to, because it shows that you understand the competitive landscape. But the issue is that, especially when companies, you see the kind of XY axis, and a company puts themselves usually in the best place amongst the competitors. I think that's what I have a problem with. I think, especially if you're coming up against established businesses, it's really hard for you to objectively put yourself in a place amongst those competitors. I'd actually prefer it when companies don't put themselves on that slide. Just show me that you know what the competitive landscape is. And actually, when companies don't put themselves on that slide, they tend to fill that competitive landscape out more, because they can be looking at it more objectively and are just looking for any companies in that space. But when you put yourself in it, then you start to be able to say things like, oh, well, these people aren't quite the same as us. We're slightly different to these people because they don't do this that we do. And then you don't have a full picture. And as an investor, you see so many things. You have such a good knowledge of a lot of these markets. And there's been times when I've seen pitch decks and I've been like, but we've invested in 10 companies that are not on this deck that should be on this page, on this slide. So I think that's kind of probably one of my biggest, it can be a big turn off to kind of see that. I think also just things that aren't quite factually correct, or things where there's been a bit misleading. And again, this comes with kind of experience. When you've seen a lot of decks, when you've taken meetings with a lot of companies and you've done investments and you get to know the landscape of whatever area you're investing in, there could be things that you've put on there in terms of kind of maybe customers that you have, or customers that you are claiming that are about to sign up, when we might know that actually that's not necessarily the case. They are extremely hard customer to get, that they don't, or that they've told us through other investments that they will not do this particular area. Or people do misleading things like in the team, they might be, it's a fine line, because sometimes you're building out the team and you want to put someone in there. But I have seen decks when I've questioned why they've put a particular person either in the actual team or in the kind of advisory team section, and I've questioned why they're there, because my knowledge is that they don't know anything about it, or they're not really involved. So again, this is the kind of thing that it builds as you have experience, but then you end up being able to kind of spot those discrepancies.
I think that's a really interesting point, and I think that's one of the things that we're trying to give young investors here is that kind of experience, right? That it's really difficult to get unless you're doing some active investing, but obviously you start somewhere, and that is usually a place of inexperience, right? So how, you know, in terms of then the competitor slide that you mentioned, and you know, the team slide, how do you go about thinking critically about those slides and going off and doing your own research? And what are the things that can you know, trip you up, that maybe when you don't have experience don't become like automatically obvious?
Yeah, I think with a competitor slide, you know, even if you've never seen a pitch deck in your life, you can research, you can sign up to. So I know when I was an analyst, I had more time than I do now, and I was able to do things like sign up to, like, for example, Crunchbase, getting alerts every day. I get alerts of all the funding rounds. I still have that email, I still get those alerts, and you get to just then build a picture of what's going on in the industry. So you can do that without being an active investor. You can make that one of the things that you do is to make sure that you're on top of all the deals that are happening, all the VC deals that are happening, and you can split it down by sector or whatever else you want to particularly focus on. So I think that's something you can do. And then when you do look at a pitch deck for the first time, you already have that knowledge because you've in your own time gone and started learning about what's happening in the kind of market. I suppose in the team one, that's probably a bit harder.
Stalking, right?
yeah, absolutely. Yeah, definitely. I mean, and especially if you are able to go to industry events and things like that and just mingle with entrepreneurs, and you'll get to a feel of who's around, and something that will help to build a kind of gut feel of this feels slightly not right. There are things that you can do, but you have to be able to put the kind of effort into doing those things and be willing to kind of do that and spend time building your knowledge and building your network. But it all helps you when you come to actually make an investment decision, or even just looking at a pitch deck at a first stage. That all helps.
Yeah, I've definitely seen team slides where there's like 8 people listed, and it's definitely not clear from the slide who is employed by the company, who is an advisor, who is just someone who's being outsourced to, and it can look like a really strong team, and you get down to it, it's like, oh, actually only one of these people is actually in the team.
I saw a slide deck for a fund, and they on their team section, they must be building out their team. Basically what they wanted to say is, there's not a team in place yet, but we want to build a team. What they actually did was they had a collage of people with a question mark in the middle, and some of the people in the collage included the late Steve Jobs amongst other people. So it seemed as if they were trying to tell us that Steve Jobs was somehow going to come back into their venture fund.
I mean, they must have had a pretty convincing pitch to get him back.
Yeah, exactly.
Gosh.
So yeah, don't do that.
That's so funny. So so there's always an element of critical analysis that you have to do as an investor, looking at every slide of the deck, right? You can't. I mean, when founders are putting this forward, this is their sell to you, and they're wanting to invest into you. So we've talked a little bit about the slides that you want to do your own analysis on. Are there any slides that you can take for granted as just being true, or should you do your analysis on all of the slides, and how would you weight that?
Yeah, I think I suppose it depends. I think this is why I am a big fan of keeping decks short and sweet. You don't want to give yourself too much room, too much rope to hang yourself. You want to make sure that you keep it succinct, that you don't give room for investors to really start picking holes in what you're doing. So for various reasons, including just saving time, I like short decks. In that case, then I can spend more time and give more weighting. I think so. As I said, kind of the important ones for me are the team, and kind of things like the making sure that I understand what the problem is and what the solution is. At this very early stage, I tend to not necessarily do really heavy, I suppose, diligence on the slides. It's a lot more of a sense check, but definitely if you're starting out, it would make sense for the first 5, 10, maybe 15 slides you're doing, decks you've seen, go away and look and research. And it shouldn't take you long if they are succinct slides. It's easy enough to go on the company's website and see if the team is listed there. If not, they should have their LinkedIn or Crunchbase will have populated their profiles. Similarly with the problem and the solution, again, it's easy to do a quick Google. What is this a problem? And then looking and seeing actually again on their website, have they come up with an actual solution? In terms of things like customers, you can't really do that. So I suppose that's something that I would probably ignore at this stage, but file in the back of my mind for later if we do end up asking them to come in. Then we can obviously look at that in more detail. So I suppose at the early stage, it's good to see that they have customers, but unless you have the kind of someone who works there, kind of on your I was going to say Rolodex. What's the new
Not anymore.
Exactly. If you don't have someone on your contacts list, then you're not going to be able to I suppose diligence that anyway. So I think that's one you can definitely not pay too much attention to.
It's interesting. So we have just about 10 minutes left. So watchers at home, please do drop your questions into the chat box to the right-hand side of the screen. Of course, if we're covering everything that you want to know, that's fine too. But like I said, don't be shy, don't be backwards in coming forwards. If you have a question for Anu, please do drop it in the chat. But so, okay, I want to get into some kind of personal things for you then. When you're looking at, maybe you've mentioned this a little bit, but is there anything, and I wonder if there's any stories that can come along with this, obviously not, keeping anonymity intact and all that kind of thing. Yeah. But are there things for you that you see in a pitch deck that immediately turn you off, that you're kind of like, okay, I'm closing that down, that's going in the bin, I can't even?
Yeah. Again, I think a lot of it, well, obvious things like really a lot of spelling mistakes, or where it's clear that they just haven't spent time on this. If you think about just any kind of school of thought on first impressions, it just, as we said before, it's a first impression. You need to be presenting your best face, and if this is something you're sending around, it will say a lot to me about you as an entrepreneur if you can't, even in a 10 or 15 page slide deck, make sure that there's no spelling mistakes, make sure that it's formatted correctly. If you can't spend the time and you don't have the time and attention to spend on that, then I would be concerned about giving you money to run a company. So I suppose.
Sorry, carry on. I'm agreeing, and I'm thinking, okay. And I'm thinking, because another element of that is that you're going to be sending this pitch deck to lots of other people, and you're going to have to sell, right? And if you can't do this in your pitch deck for investment, is this going to be an issue with brochures you're sending to customers?
Absolutely. Yeah. It will just say a lot about the way that the business is running, and the thing for me is I don't expect pitch decks to be perfect. They don't need to be, super slick. They don't need to be complicated with loads of graphics, and they can be really simple. There's some really good examples of simple ones, and just get to the point. But if you do choose to make it complicated and then you make lots of mistakes, then that is a turn off. As I said before, really long pitch decks, that's something that I won't even look at, especially now.
And what is really long for you? Because we've had some stunners, like 30, 50, and their business plans really in PowerPoint format. And so what is really long for you? What is your cutoff?
For me, I don't really like looking at decks that are longer than 15 slides. Yeah. That is the maximum. I like kind of between 10 and 15 is kind of the sweet spot for me. Anything longer than that, but I think that also is just to do with the time. It's that I just don't have the time to read that in depth, and I think it's really important that as investors, as companies, they're respectful of investors' time, because we're going to be seeing a lot, and we're going to have a lot of people wanting us to look at their decks and wanting us to take meetings with them, and I think it's just kind of fair to keep it short and sweet. And actually, it's a skill to be able to know your business inside out to the extent that you can distill it down into a succinct form and be able to sell it. And sometimes I think people just don't know. They know their business because they are running it, but they just don't know it in terms of how to sell it. And I think that's a really important skill to be able to, people talk about the elevator pitch, being able to be in a lift with someone and, going between floors and being able to sell your business. I think all companies need to have that. They need to have the kind of the one-liner, the kind of the one sentence, the one paragraph, and the one pager. They need to be able to tell their story in various forms. So for me, this is also, it's not just a way for me to find out about companies, it's also almost a gating point as well. It's do they get it? Are they able to be succinct about it? Do they know how to put their company the best face forward? Because if we're going to end up having a relationship over potentially various rounds, then we need to make sure that it's something that we want to be in. The other things as well that kind of are pre-opening the pitch deck things. One that's, it's very, very mixed in the industry, but NDAs, you get asked to sign non-disclosure agreements, and kind of where I've been, we just don't sign them. But some people do. It kind of puts me off when people ask to sign NDAs, because I think we see so many, for various reasons, we see so many pitches. If we spent time filling in NDAs, we'd be filling in NDAs.
And monitoring them as well.
And monitoring
track
them,
of
making sure.
Yeah.
Exactly. And then because we see so many things, there are unique elements to ideas, but after a while, there are so many similarities in ideas. And if we chose to invest in something and it turned out to be slightly similar to something that someone had sent me a pitch deck, well, I don't want to, be monitoring whether or not it's slightly encroaching onto their territory. So I think that's one thing. And then also, again, it doesn't happen that much, but sometimes when people put decks onto other platforms and they send you a link to download it, I'm not doing that. You need to just email me your deck and let me just open it there and then. I'm not going to go to Dropbox. I would like you to send me the deck.
Make it easy for me, right?
Yeah. Make it easy for me to just open your deck. So.
It's so funny, on the NDA conversation, I literally just had this exact same conversation this week. Somebody had asked us to sign an NDA, and one of the students came back and said, what's our policy on this? I'm like, we don't, for all the reasons that you just said. It's, that's really interesting. And I guess for us, we a lot of the founders that pitch us are first-time founders, and obviously we're so early in sort of the investment scene. We're kind of pre-seed, really. That often most of the time we give founders the benefit of the doubt. If they send us a 30-page pitch deck, it's like, okay, this isn't a pitch deck. Do you think you could condense this into 10 to 15 and send it back to us? Or we explain the rationale behind the NDA thing. I think partly because we don't want them to go on to another investor and do the same thing and come across as, I don't know, maybe naive or,
No, that's good. That's really good.
So, okay then. So we talked about things that make you put things in the bin immediately. So our last session that we did on YouTube Live was about first investor meetings, which is often the step after, having received a pitch deck and the investor looking at it is, wants to take a meeting with you. So what are the things in the pitch deck, that really make you want to take that first meeting?
Yeah. I think I'm always more inclined to take a meeting when someone's been able to express and explain their proposition in a succinct way, but very clearly. But also, I like when they leave me wanting a bit more. They leave me having, some questions that I actually want to meet them face to face to find out the answer to. It's that kind of making your company kind of pop off the page, which is not necessarily easy to do, but I think if you really have the passion, you can do that, and you can kind of infuse that into the deck. I suppose if you're in a very, some of it is not really anything that the entrepreneur can do. If they're in a very, if it's an area that we've said that we are quite interested in investing in, or maybe some area where we're quite underweight in terms of the portfolio, and obviously I get excited. So for example, now at the fund of funds level, I get excited when I see a fund that's targeting the luxury sector.
Oh, really?
That's a personal interest of mine, and we don't have anything like that in the portfolio. So when I see that, I probably will tend to be more, especially when they're able to really just, as I said, make it kind of pop off the page. So yeah, I think that those are some of the things. A lot of it is just quite intangible. It's a kind of gut feeling that there's something more here. There's something more here that I want to find out about, and I want to understand, and I want to see. I think that's it. I think the bar. Trying to think how high my bar is in terms of
probably gets higher and higher and higher, right? The more law of big numbers.
So. I think so. I mean, I think although I'll tend to have a call with a lot of people. I wouldn't say most, but I'll tend to have a call with a lot of people, and then kind of basically try and marry up the deck to the phone call. And if that is
Right,
all good,
interesting.
then I'll invite you in. I think that's the thing.
So you have another step before you pick up the phone and, okay, you know, is this person a crazy person who's just really good at putting stuff down in a pitch deck?
Yeah, because you know, and it works throughout the whole process that someone can be really good at pitch deck or even really good at pitch, but actually that is not always an indicator of you know, how well they're going to be able to be running a business. And sometimes it does kind of disadvantage people who aren't good at putting a pitch deck together and who aren't good at pitching. But at the same time, there's a lot of resource out there to help you. There's so many companies have opened up their templates and, you know, just given them to share with the rest of the ecosystem, that it's easy for you to find out how to do those things. So I suppose it shouldn't really be an excuse, but I am sometimes conscious of the fact that if you're really good at those things, then you do have an advantage over other people.
Great. And so we are fast running out in time. In fact, we're just about 30 seconds over, but just have one more question then from the audience. So bear in mind that the majority of our audience is you know, very early in their investment careers. A lot of them are student VCs. And so just wondering, what is your one top tip for student VCs who are maybe had a boot camp, had some education, watched some of these webinars, and are still in their sort of 5 to 10 to 15 pitch decks? What advice would you give them?
So this industry is very much gut feel in a lot of ways, but it's also informed gut feel. And I think at this stage of your career, when you're very early on in your career, you have the luxury of time to absorb that information, and the information is what will help you hone your gut feel later on. So as we mentioned before, in terms of knowing what deals are being done in the market, knowing kind of what entrepreneurs may be leaving which companies and might be available, just do that research now when you have the luxury of time. Although it might not feel like you have the luxury of time, I know what it's like at uni, but you do compared to, you know, how crazy it can get later on in your career. When I was an analyst, I used that time to make sure that I really got honed my information and became the kind of go-to person for knowing what's going on in the market, because that really helps you to hone your gut feel. And I think that would be my top tip.
That's awesome. And that actually fits really well with some of the way that our teams structure themselves, in that they have a core investment team and then they have a wider network team like society, where they get together, they go to events, they talk trends, they, you know, all this kind of stuff. And so that's really good to hear that that's the kind of stuff that they should be doing, you know, more and more of. Well, Anu, this has been awesome. Thank you so much. That is, I can't believe we're out of time already. But just a massive thank you to you, Anu, for your insight. And thank you for joining us at home. And if you enjoyed the session, don't forget to subscribe to the channel and turn on notifications by clicking the bell icon. If you have suggestions for future topics, drop them in the video comments, and we'll see what we can do. Until next time, goodbye.
Bye.